Have you ever felt like picking the right stock is like trying to win the lottery? You scroll through dozens of companies in the Dow Jones, each with glowing headlines, volatile charts, and conflicting opinions, and still end up asking yourself, where do I even begin? Well, what if I told you that you don't need luck, just a smart strategy? In this video, we're going to break down how you can identify strong Dow Jones stocks by looking beyond the headlines and diving into what really drives growth. Whether you're new to investing or have been in the market for years, you'll walk away with valuable insights. The Dow Jones Industrial Average isn't just a random collection of companies. It's one of the most respected benchmarks in the world, reflecting the performance of 30 massive corporations that help define the U.S. economy. These companies span across different industries: tech, healthcare, finance, consumer goods, and they each play a crucial role in the market's overall movement. Think about names like Apple, Microsoft, Visa, and Johnson & Johnson. These are companies that don't just participate in the market, they help shape it. But with so many big names, the real challenge is figuring out which of these giants are still worth investing in today. Markets are always evolving. Consumer behavior shifts, technology changes, and economic trends reshape industries. Just because a stock was a good investment last year, doesn't mean it will perform the same next year. So, the key question becomes, what makes a stock worth buying now? Let's face it, investing isn't always logical. Even companies with strong profits and positive earnings can see their stock prices fall. Why? Because the stock market reacts not only to numbers but also to investor expectations, breaking news, global politics, and even social media sentiment. A strong earnings report might be overshadowed by a sudden interest rate hike, a disappointing forecast, or a surprising global event. That's what makes the market both exciting and risky. It rewards preparation, but punishes emotional decisions. So how do you increase your chances of success? It all starts with understanding what makes a company fundamentally strong. Smart investors don't follow hype, they analyze. They look at the company's financials: consistent revenue growth, healthy profit margins, low debt, and a clear roadmap for future innovation. They study industry trends and try to determine whether the business is positioned for growth or struggling to adapt. It's also important to consider a company's competitive moat, that is, how well it protects itself from competitors. For example, Apple's ecosystem of devices and services makes it hard for users to switch. Microsoft dominates the enterprise software space with long-term contracts. Johnson & Johnson has multiple business segments: pharmaceuticals, consumer health, and medical devices that help it stay profitable even in tough times. A strong moat can offer long-term security in an uncertain market. Now, let's look at 3 Dow Jones stocks that continue to impress investors and why they reconsidered smart picks right now. First, Salesforce CRM. This company is a leader in cloud-based customer relationship management. As businesses around the world shift toward automation and digital engagement, Salesforce is becoming essential to modern operations. Its innovation in artificial intelligence, particularly through products like Einstein GPT, shows that it's building tools for the future, not just reacting to the present. Plus, its recurring revenue model offers stability even during economic slowdowns. Next, we have Visa. Visa is far more than a credit card provider. It's a major infrastructure player in the digital payment revolution. As cashless payments grow globally, Visa is expanding its reach across mobile wallets, e-commerce, and even crypto payments. It's also building partnerships with fintech startups to stay ahead of the curve. With millions of transactions running through its network daily, Visa is positioned for long-term relevance and growth. It's not to mention, its profit margins are among the highest in the financial sector. The third stock is Nike, NKE. Nike is an iconic brand, but it's also a tech-savvy company. From smart wearables to direct-to-consumer digital sales, Nike is innovating in ways many retailers struggle to match. It has an unmatched global presence and continues to focus on sustainability and athlete performance. Nike doesn't just follow trends, it sets them. The company's investments in immersive shopping experiences and athlete data tracking platforms show it's ready for the future of retail. If you want to reduce risk and still benefit from market growth, consider balancing your picks across sectors. For example, Apple and Microsoft offer exposure to the fast-growing tech space. while Johnson & Johnson provides more stability from the healthcare sector. Companies like Procter & Gamble and Coca-Cola can add reliability even during recessions thanks to their focus on essential consumer goods. Diversifying across sectors helps protect your portfolio from unexpected shocks in any one industry. It's also helpful to pay attention to dividend stocks. Many Dow companies like Coca-Cola, McDonald's, and Chevron offer consistent dividend payouts, which can provide passive income and reduce overall portfolio volatility. These aren't flashy stocks, but they're reliable, especially if your goal is long-term wealth building. But remember, there are no guarantees in the stock market. Every investment carries risk, no matter how strong the company looks on paper. That's why it's critical to invest with a long-term mindset. Don't panic when the market dips. Instead, ask yourself, has the company's long-term vision changed? Are its fundamentals still strong? Emotional investing often leads to poor decisions, so patience and discipline are key. In conclusion, choosing the right Dow Jones stocks doesn't have to feel like gambling. By understanding market trends, analyzing financials, and focusing on innovation and long-term value, you can build a portfolio that stands the test of time. Stocks like Salesforce, Visa, and Nike aren't just solid performers, they represent where the market is headed. So what do you think? Are these stocks on your watch list? Or do you have your own predictions for the next big movers in the Dow Jones? Share your thoughts in the comments side. Love to hear what you're watching. If you found this video helpful, don't forget to like, subscribe, and check out the rest of my channel for more insights into smart investing strategies. The stock market may be uncertain, but your knowledge doesn't have to be.